Looking at today's SPAC market, and you're getting into 2026 versus 2021, 2022. What do you see as the big differences?
I think there's a lot of differences within this SPAC market now. Back in 2021, 2022, our original team, we entered the market, and there was a market equilibrium that was in balance. And you had more SPACs on the market than there were actual companies that were viable to take public with a de-SPAC. So back in 2022, you've seen the SPAC market change with the sponsorship groups. And I think that's where the origins of it was. It was to have what I call a diverse team with athletes, entertainers, and people that were not necessarily from the finance world to come in and make the teams more what I call likable, and to allow these companies to actually like the team and de-SPAC with them. But from a traditional standpoint, that's not what the SPAC vehicle was created for. It was really created for an opportunity for smaller cap companies to take advantage of the capital markets opportunity. So what do you see now? It was a SPAC bubble, and there's an extreme contraction within the SPACs that were entering the market, not only just from a regulation standpoint, but just with the sponsor team not getting what I would like to look at as favorable terms. The monies in trust were increased, the timeframes where you had to find a company decreased. So that kind of what I call, it balanced it out. And traditional SPAC teams re-entered the market back in 2025, 2024, and you see that now. Regulation has what I call clean some of the actors out, which gives us the opportunity to really take our time and do the right homework to look at these companies that we think have true value and where they can deliver value to the shareholders.